touch on today is cash flows. So why should we use them? Run through a cash flow example, a very basic one. Look at the various government funding options that are available to us. Other factors that we're going to have to consider post-lockdown. So cash flows, let's start with why do we use them? And can I ask a question, who here does have a cash flow that they use at present? And I think Claire's going to send a little poll round. So can you just answer it yes or no? How have we got on, Claire, with a poll? Has everybody managed to answer it? So actually, not bad. 56% do and 44% don't. So next question, again, a poll question. For those who do have one, how often do you review it? Do you have a cash flow, of course? Do you currently use, do you have one? Is that the same question, Claire? Yeah, do you review it every quarter? Answer that one. The wonders of modern technology. We can just answer a poll like that. So most people of those who do have one do review it. So you're quite well, actually, because when we find with dealing with our clients that there is only a small proportion of businesses that we come across that actually have a cash flow forecast. Now, it might be that in the current environment that obviously a lot more people are looking at their cash flow to see where they're going to be. And I think it's an essential tool that we need to be using. It really is. We don't know where we're going to be in 3 months' time, 6 months' time, 12 months' time. So in certain times like we are now, a cash flow can help you to plan for where we're going to be in the future. So let's take, for example, if you were going to drive in your car somewhere, let's say you were going on a 100-mile journey to somewhere you never knew where you were going, the first thing you would do when you got in the car is to put your sat-nav on. And that would help you to get you to where you want to be. It's exactly the same with your business. You want to be driving your business to where it wants to be, and therefore you need to be taking it on a set route. And the cash flow can be the way that will help you to get you where you want to be. So I think it's really important at this time to spend a lot of time programming in the sat-nav for your business. So next we're going to go to an example of cash flow. So I'll just call that up. Again. Okay, so here's one I've prepared earlier. It's very simple, and it is just an Excel spreadsheet. Before I get into the bones of it, there are many types of cash flows that you can produce, and it can be reams and reams and reams of spreadsheets, pages after pages after pages. But I'm a big believer that the more complicated it is, the less likely you're going to continue to use it, because you'll get fed up with it, and then eventually you'll just dump it. So I want to keep things fairly simple if you can. So spreadsheets are one way of doing it. There are plenty of cash flow tools out there like Futurely or Float. We like to use Futurely ourselves. So it depends how in-depth you want it. But as I said, the more complicated it is, the worse it's going to be. And you've also got to bear in mind what the purpose of the cash flow is. So if you're just doing something for a short term, you probably just want to do it on Excel. You don't want to have a complicated system that you're going to follow. And I think you need to think about 3 types of cash flow. The first one will be a short-term one, which is probably what we're wanting to do at the moment with the coronavirus pandemic around. So it wants to be very detailed and very as accurate as you can get it. And it's usually only for maybe 1 quarter, 3 months, and you'll do it as a weekly cash flow. The next one to consider is then the 12-month cash flow. So reasonably accurate, will be done on a monthly basis. And again, even within that, you might have 3 versions. So the first version might be your best scenario. If things go really well, if I reopen my business and things fly straight away, this is what I'm going to achieve. Your second version will be your sort of most likely scenario. What you think, well, this is more likely to happen. And then your third one is your worst case scenario, where you're thinking, well, actually, if things don't work out how I want it to work out, this is where I'm going to end up. And then the third type of cash flow that you want to be looking at is your longer term vision. So you're looking at probably here a 3-year cash flow tying into your vision of where you want to be in 3 years' time. So that's going to be very broad brush, might be quite detailed in the first year, but then lots of guesses and assumptions thereafter. So depending upon what you're doing your cash flow for, it will depend on whether you do a cash flow with profit and loss and balance sheet, or whether you just purely do a cash flow. So ones that we've done recently for clients have been very much focused just on the cash flow, not doing profit and loss and not doing a balance sheet. And that's purely just for bank purposes to get the Sybil's loan, or just for their internal purposes to see where they're going to be. So when we start with a cash flow, the first thing we need to think about is where we're starting from. So looking at today, we're on the 3rd of June. So I'm going to set this from the 1st of June. I've created a business called Mark's Magnificent Meat Limited, just one I've made up. So obviously I run a meat company, like a butchery, but I also have a cafe, and I have a little bit of a shop, farm shop as well. Sorry, a bit of farmland that I sell some meat from as well. 3 things that you're going to need when you start a cash flow. Very simple. You need the opening bank balance, you need the opening creditors, and the opening debtors. And in fact, that's all you need to start off with. So on this example, very simple, put in, and we've got this template spreadsheet. We can help, and we can send this to you after the webinar. I think Claire's going to send out the template to you. You can tailor it for your own needs. So you put your start date in, you put whether it's monthly or weekly or daily, and you put your opening bank balance. And if you have an overdraft with the bank, you put that figure in as well. You can see it comes out automatically just setting it monthly. And what you want to start with is putting in your sales, and you want to break your sales down as much as you possibly can. So in this scenario, on this business, I've broken it down between shop, cafe, and farm receipts. So at the moment, my shop is still running, but my cafe is shut, and I'm getting a little bit of income from the farm. I'm projecting that forward. So basically what I'm doing is I'm saying, this is what I'm getting, I'm hoping to get each month. And then the farm will start to open up, sorry, the shop, cafe will open up from October and start to get some income. Here, these are just an example. Obviously, it will be different for every business. So I've put that in. I'm then considering what other things I'm going to get. Well, because I've been shut for a while, I'm going to think I'm going to get some sort of VAT refund. And I've been furloughing my employees, so I'm going to get some income there. So I'm putting all the income sources I possibly can in there. Then similarly to the sales, on your purchases, you want to break those down as much as you possibly can. Now, because I'm a shop and a cafe, I don't have any debtors. That was quite easy. I could have put my opening debtors being received in month 1. But I do have a lot of creditors that I'm owing, and I've brought all those creditors in on top of some that I pay in the current month as well. So you might want to break those down. And of course, being in lockdown, what a lot of businesses have done is they've deferred some of their creditors, but you may want to start thinking about paying these creditors, because very soon you're going to have to work with your suppliers to get yourself up and running again. So you're going to look closely at who you owe money to, and can you afford to pay them, and when can you afford to pay them. So you might want to break your purchases down more than what I've done there, and I would suggest you probably should do that, and target specific suppliers as well. Then I've put the wages in, the net wages. I'm going to buy some animals and put that in. Got the furlough wages in there as well. And then I've gone down my overheads and I'm putting all my overheads in, a whole string of overheads, and I'm putting those in gross figures. So what you're actually physically paying out. It's a very simple, simplistic cash flow that we're working on here. What physically goes out of the bank each month for your computer expenses, power equipment, accountancy fee. Obviously, I employ a fantastic accountant who looks after me, and even though I'm getting charged £700 per month, it's well worth it. Hunter Gee Holroyd had the name, by the way. So put all the expenses down. And then in addition to that, you need to put other things that are paid for. So you need to put in your VAT payments. So eventually I'm going to be making some VAT payments later on in the year when my turnover picks up. Also, you've got to consider, a lot of businesses have done that. They've deferred their VAT, pay as you earn, possibly corporation tax, possibly income tax if it comes to it, if you're not a company. And you can obviously need to bring those in later in the year to catch up with your deferred VAT and your deferred pay as you earn, as I have done here. I'll talk about that later on. And then your ongoing pay as you earn costs. Corporation tax, I've made a healthy profit in the last year, so I've got a £40,000 tax bill to pay. So I run a very profitable business. I'm looking at my business. I've decided to buy some new equipment, so I've invested 55 grand there. I've done an agreement with the supplier to spread it over 5 months. So I've done that as well. I've kept my drawings down for the time being, but I'm looking like I'm going to increase them later in the year. I've cancelled my loan repayment, so I'm just paying interest on the loans. So they've been taken into account. I've got a loan from a pension scheme, which I've cancelled altogether, but I'll pay that back later in the year. And Lombard loans. So you all might have some of these things, you might have none of these things, but basically you want to pull up as much as you can. Every single thing that goes out of your bank needs to be fed in to the cash flow in one way or another. And then at the bottom, you've got the movement in the cash. So we started with 28,000 overdrawn, we're taking in 76, and now going to 123 in month 1, leaving us with 76,000 overdrawn. But we do have a £100,000 overdraft limit. So we still have some cash headroom of 23,000. And as you can see, as the months go on, that sort of moves around and dwindles. And eventually, once we start paying the deferred VAT, the corporation tax bill goes out, that's where the cash flow issues are starting to hit. And I think this will be a common issue that businesses are going to have. We're probably okay now, because we've got support from the government, we've had grants. But looking forward, when the deferred payments come in for the VAT, the pay as you earn, the corp tax, the income tax, with the ongoing tax bills and the impact of when your business starts to generate income, that's where the issues are going to be. So at that point, that's when we need to decide. So if I was looking at this, if I am the accountant of Mark's Magnificent Meat, I'm going to say to this client pretty soon, well, you need to be looking at other forms of getting some a loan in, because you're going to run out of cash very soon. And that's on this basis. So I would be approaching a bank and saying, I'm going to be looking for at least £150,000 loan. You put that in. That's the repayment at the top. Draw down £150,000 and make my loan repayments. Let's say it was £2,000 a month. Just drag it across. That would populate the rest of the thing. But that then shows that we are then got some headroom even later on in the year. But even on £150,000, as you can see, it's tight. So I hope that shows you a very simplistic way of doing a cash flow. It wants to, as I said, depends what you're using it for, but it does want to be simple but as accurate as you can get it. And we will email the template to you later after this webinar. So that's the example done. So what various government funding options have there been? Well, there have been quite a lot. I think my personal view is the government have been very good in responding on the financial side. It might have been a bit slow in getting lockdown in place in the first place. They firstly introduced Sybils, which, although it initially sounded great, 80% secured by the government. Unfortunately, in reality, it hasn't really worked unless you are have got a business that's got other things it can put in as security. So effectively, businesses that didn't have any security have really struggled to get any loans through. The saviour has been the bounce back loans. They have made a massive difference. So businesses that were looking up to 50,000 to 100,000 through Sybils, when the bounce back loans got launched, they just said, well, I'm not going to bother with that. I'll just take out my 50,000. But loans came through within a week. If you haven't got a loan at the moment, the Sybils loan and the bounce back loan end on the 4th of November. So you've got to consider getting your applications in soon if you haven't started that process. Bounce backs are very easy. But it is limited to 25% of your turnover, but it's at a fantastic rate of 2.5%. And obviously what we've seen, which is probably a little bit naughty, is a few of our clients have been taking a bounce back loan to refinance other debt elsewhere, which is on a higher interest rate, which is not the purpose of the bounce back loan, but that's in reality what has been happening. The third thing that they brought in was furlough, which again, of course, has solved short term a lot of problems. So people are furloughed for at least 3 weeks and you get 80% of their salary, up to a limit of 2,500. Bearing in mind that this changes from July. So if you're thinking of furlough anybody now, you've got another week to do it because they need to be furloughed for 3 weeks before the end of June. So I think 10th of June is the key date. If you're thinking of furloughing somebody, do it before the 10th of June for 3 weeks. And then from July, though, you can furlough people who have previously been furloughed for a week at a time, so it shortens the period. So well worth bearing that in mind as well. Then there was the SEISS for the self-employed, but that was left to the taxpayer to claim, so we couldn't help our clients for that. Interestingly, we got some stats back from the revenue earlier this week that only 2/3 of the expected claims have been put in so far. So the revenue have calculated how many they thought were going to be put in, but only 2/3 have actually gone through at the moment. So that means there's a hell of a lot of taxpayers who haven't put a claim in yet. Now that might be because they think they're not affected by the coronavirus and therefore still effectively still working, so don't need to make the claim. That might be one of the reasons. Who knows what they are, or they just don't know about it, or they're just not bothered to put it in yet. The other things that they brought in, the rates grants have been fantastic for those businesses in the retail, hospitality and leisure sector, who obviously got a grant of 25,000 if they were below 51,000 rateable value, and obviously got no rates to pay for 2021. And then for other businesses, smaller businesses who have a rateable value below 15,000, they got a £10,000 grant. But there were a lot of businesses that didn't get those grants for one reason or another, because they were maybe in shared office accommodation, or their rent included the rates, or they just paid a higher fee. There's all sorts of other reasons why they might not have got a grant. So as of Monday, York Council, as an example, brought out an additional fund, grant fund of between £1,000 and £10,000 for hoping to catch those businesses in that position who haven't got a grant. Also covering, I think, B&Bs as well. So businesses in that sort of sector might now start to get some sort of grant. However, having looked at the application form, it looks like you need to put a cash flow in, funnily enough, as well as part of the application. So you might want to consider that template that I put in earlier if you are going to put an extra in, and sending that in as well. So that's the end of the various government funding options. The other thing that, of course, has happened is that, as I mentioned before, the tax deferral. And the four things that could have happened: corporation tax, income tax, pay as you earn, and VAT. And what you might be thinking at this moment is, okay, we're potentially starting to come out of lockdown. Some businesses are opening again. However, I might be in a position where my business is not going to open for another 2 months. I've still got some of these things coming out. Can I defer more? And I think the answer to that is probably yes. Probably yes. And just bear with me. Apparently I'm not sharing. Is that sharing now, Claire? Just give me a yes.
Yes, it is, yeah.
Excellent. So, but ultimately it's going to be down to the revenue. So we are going to have a discussion with the revenue on, firstly, when are we going to catch up with our VAT, pay as you earn, corporate tax, or whatever it is? Can we defer some more? So could we defer? We might have deferred payroll or the pay as you earn for April, May, and June, but could we do July as well? Could we possibly do August? My feeling is the revenue are going to be extremely flexible, and although they've not been issued, we've tried to ask in the question, have you got any guidance yet? And the response we've had is they haven't been given any guidance at the moment. But my feeling is the revenue are going to be extremely flexible on this. So similarly, on the length of time that you're thinking of making your time to pay, I would suggest, if we're going to do it for clients, I'm going to suggest to our clients that we go for 24 months, 2 years. Not normally done. I think the most I've ever done in the past has been a year, which was obviously in the last financial crisis. So I think we might be pushing it to 24 months, but there's certainly no harm in trying. The higher we aim, you know, they're going to lower it to say 18 months. If you aim at 12 months, they might lower it to 9 months. So my suggestion to anybody doing it on their own would be to push it as far as they possibly can. So I've put the telephone number on there as well. 0800 024 1222. So if you want to call them yourselves, by all means do. And that leaves us finally to other considerations that you might want to think about coming out of lockdown. So I've sort of got these into 4 areas. So firstly, you need to think about your staff. So how are you going to get your staff, your team back into work? You need to do some sort of formal risk assessment. You need to cover yourself in case something happens. Have you thought about, obviously, the safety side of it, the sanitizers, the social distancing implications? So, for example, us in this office, in the York office, we have little offices. You can social distance fine in the offices, but then moving around the corridors, how about using the kitchen, going to the toilet, all these other areas, common areas, how can we social distance in those areas? Another big thing that we also need to think about as employers are the mental health issues. So how are we going to deal with the mental health issues of our staff coming back? Because a lot of them are maybe struggling in working from home. They might not want to come back to work. They might have issues going on. So are you able to deal with those issues? You may want to consider contacting someone who you can set up a link with, so that if someone has got a mental issue and want to discuss it and you don't feel comfortable in doing that, that you've got someone to refer them to. And obviously, with the way that we've been working, you might want to think about, well, actually, do we need to get everybody back in the office? Is this the right way of doing it? We might want to think about, can we do more working from home? We've already had one of our team members ask if they can do 2 days working from home and 3 days working in the office. So it's more likely that the way people work is going to change. Do we need to go to have a meeting somewhere with someone? Can we just do it online as we are doing here? So that's the staff side. The next one is your customers. Very similar to your staff. So again, you need to do some sort of a risk assessment. How are you going to deal with them? How are you going to welcome them into your business? If you're running a shop, how are you going to do that? How are you going to be doing a cafe? Whatever your business model is, how are you going to do that? What are the safety measures you need to put in place? sanitizers, the social distancing. What additional costs are you going to run into? You need to put screens up. Do you need to put tape out? What are the costs of all the sanitizers, etc.? So you need to think about also those extra costs, and those obviously would need to go into your cash flow as well. Your suppliers, as I mentioned before, you're going to have to work closely with your suppliers. So if you're in a business that sells something, you buy it in, how soon can you get it from your supplier? What is your supply chain like? What are their restrictions? Have you paid them? They will not deal with you going forward if you've not cleared their debt already. So are they using sanitizers? What are their health and safety? So you need to pick up the phone to your suppliers, I would suggest sooner rather than later, and have a discussion with them about your plans and how they can help you so you can work together. And finally, of course, got to say it, you got to work with your accountant. We are here to help you overcome all of these issues as much as we can possibly help. So we'll talk them through with you. If you need some assistance, if you want to do things yourself, you need some assistance with your cash flow, by all means, we will help you with that. But let you do the bulk of the work if that's the way you want to do it. If you want to give it to us to do, we will, of course, do it. And so we're here to guide you through life after lockdown. So my final slide, turnover is vanity, profit is sanity, cash is reality. Okay, thank you. I think we may have some questions on the chat. So Damien, did you put one down? So Damien, what radius of business location outside of York does the York Council grant cover? Well, it is literally just businesses who are located in the York area. So if you don't, which I don't think you'll be in, Damien, you might be in Hamilton, I suggest. So it might be that you need to, we were saying this yesterday in our team meeting, we're going to look at Selby, Hambleton, Scarborough, because obviously we've got the coastal clients as well, probably Rydale. So we're going to be doing some research into some of the other local authorities. I know Hull has already got something else set up as well. So we'll be sending out an email to clients soon, Damien, just to let them know about those other areas and what we've managed to find out. Okay. And I think, Dave, you're over in Wetherby, aren't you? So there might be something we'll look for over there as well.
Mark, it's Lily. What did that last slide just say? Turnover is vanity. Profit is sanity?
So turnover is vanity. Profit is sanity. Cash is reality.
I like that.
Good. Okay. Has anybody else got any other questions they'd like to bring up or anything they're not clear about from what I've said this morning?
Mark, just a quick question. On the COVID-19 policy risk assessment everyone has to do, have you come across any good examples on that?
I haven't yet, no, Duncan. Nigel Everard, my fellow director, is going to be doing it for ourselves. And as soon as we find that out, we will be obviously again issuing it on our website so others can use it for their own businesses. You found one?
We've got one, but is it any good? Who knows? So I was just looking for examples to sort of compare and contrast.
Yeah. We'll definitely find one soon.
Mark and Claire, if you're in terms of the extra grants that the council are putting out there, if you've got anybody, including Damien, maybe in Hamilton, you might want to speak to Mark Bates, who's now at Rydale.
He's at Rydale, isn't he?
I know Claire will know him as well, but if you get Mark's been putting things out for Rydale, so yeah.
That's great, yeah. I've been speaking to Mark, so we'll try and get some other information out, obviously, for the other local councils, so that clients are aware in those areas. Thanks.
Okay. And did screen freeze for a while?
Oh, I think you're all right. You were going a bit stuttery at one point.
That was just Mark.
Just like the video. It wasn't just me. Very good. Well, I'll give you a clap all for attending. Thank you very much. Good to see you all. Thank you for joining us today. There might be some more webinars coming soon. I think Claire's going to be sending something out next week as well.
Yeah, and I'll obviously circulate the slides and the spreadsheet to all of you as well, hopefully later on this afternoon.
And if anybody wants a link to that video, by all means, just let me know and I'll send it to them as well. Okay. Thank you for joining us today.
Thank you, Mark.
Cheers, Mark.
Thanks for coming.
Thank you.
Bye.
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 Bye. Bye.
Okay.